Hey, what's up, Justin? How are you today? Good to see ya. How it feeling, guys? Good weekend? Do cool stuff? Good morning, Wayne. Guys, remember that this is an educational room. Hey, what's going on, iPapa? Good to see you in here. Man, everything that I do in here is educational purposes, guys. I can't stress that enough. I do not call trades. Hey, Lamar. Good to see you. I don't tell you what to do, guys. I teach you how to read indicators so you can make good decisions. Been doing it for a while, getting pretty good at it. And now we're gonna go through and we're gonna do some cool stuff today, guys. Everything that I do is simplicity. Everything I do is designed to give you the path of least resistance to get to where you want to be. So as I see some new names in here, iPapa, it's great to have you. Tesla Nerd, it's great to have you. Guys, I don't give you everything that you can do with the software. What I do is I give you the best thing you can do with the software. I teach you how to read indicators so you can make great decisions. And as you're on that journey, I'm going to hand you a plan with a methodology that you can prove wins more than it loses. Now, with this methodology, you have an edge or an advantage, guys. Trading is about probabilities. It's about focus on the execution. Let the results be what the results are. But if you've proven that your pattern wins more than it loses, guys, just stick to the pattern. That's the easiest thing to do. We do stop off, check news each and every morning, guys. We've already gone through medium impact Empire State Manufacturing. Good morning, Miss Trina. Nice to see you here. And then there's no more news until tomorrow morning, guys. And tomorrow morning, they're probably going to blow it up at 8:30. We know about it. We can see it. We don't have to trade into that craziness. I'm going to show you a picture that I made this morning. This pretty much sums up everything we do, guys. And to be honest with you, this sums up what Nexgen's been doing for nearly 30 years. The market goes up and down. That's it. That's all the market does, guys. Beyond that, don't care. There's only three things you can ever do as that market goes up and down. You can buy when the market is going up. You can sell when the market is going down, or you can wait when you can't tell what's going on. Guys, when a trend is established, there's almost always a small fight against that trend. So a trend up, there's almost always a push down. And when there's a trend down, there's almost always a push up. The trend trade methodology has you pinpointing where that fight is most likely to be lost, guys. This is what we're going to focus on both platforms. If you can wait for that fight, if you can sit on your hands and wait for that best of the best, what happens is you can put yourself in a position to win more than you lose. So what I do each and every day is I talk about high probability trend trades, whether it is NinjaTrader or whether it is TradingView. It doesn't matter which one you're on. What we're going to do is we're going to focus on the absolute best of the best, getting you guys exactly where it is that you want to be so that you can be consistent, so that you can feel as though you have an edge, an advantage, you can know that you do. And I want you to focus on the execution of the method. So the way class works, especially for my new people, we're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. I'm going to start with NinjaTrader because I have more NinjaTrader users. I also have TradingView users. Don't worry. I'm going to have you as well. Daniel 3, I know you're here on NinjaTrader. This is for you. Tesla Nerd, what platform are you on? Are you looking at NinjaTrader? Are you looking at TradingView? Same question, iPapa. Help me out, guys. Let me get you everything that you need. Regardless of which platform you're on, though, I'm going to hand you rules. And when I hand you rules, remember that this is the basic rules, the foundational rules. I'm going to hand you a plan. You're on TradingView, iPapa. All right. So suffer through a little bit of NinjaTrader with me for a second, and then the TradingView plan will be yours. Wayne, I will wait with bated breath. There is a KISS plan for both. Whoops. And when I say a KISS plan, guys, I'm going to hand you a plan. I was hoping you'd catch that. I'm going to hand you a plan that is designed to optimize your chances of success with this software, guys. This is not everything that you can do. This is like learning how to scramble an egg so that you can learn to cook more, right? This is a stepping stone, but it's going to teach you to read your indicators. That's what you want to do. You will craft your own plan eventually through study, through feedback, all that good stuff, guys. Um, and it really just, it goes through and it gives you the best of the best. And that's what we're going to do. We're going to focus on rules. Now, here's the hard part. You can simulate, you can practice, you can take trades, you can move stops, you can enter, you can exit, guys. You can do all of this stuff on simulator as you learn these patterns that we talk about. If you want to get there the fastest, if you want to be where it is you told us you wanted to be sooner than later, post in my room, guys. Every day, you have the ability to take a picture and drop it in the room to say, hey, Mark, this is what I saw. This is where I saw it. This is what I did. This is why I did it. Give me a private session right here in front of everybody. Did I read it correctly? And that's what we'll do, guys. We'll focus on making sure that you're trading the correct rules, that you're understanding the chart read. That is the first step in becoming a confident trader ASAP. The second thing is track your real-time performance in a spreadsheet. Now, guys, I built a new one for you. I'm not going to differentiate between TradingView and NinjaTrader. This is nothing more than a tracking sheet. It's a tracking sheet that lets you put the date, good morning, OG, the picture, how you did, and then I think the most important question, did you follow rules? And then there's a whole section for feedback from class, guys. So when you post in the room, and Wayne, I can't use your chart because it is crazy. When you post in the room, you're going to say, Mark, this is what I did. The triggers were up, price was on the weak side, I managed it assertively, everything set up, and I found a trend trade to go up with it. And then once I went up with it, I held for my bigger targets. Could I have done it better? Did I read it correctly? Is everything as the plan suggests? And of course it was. Victor, great job. You'll be able to put the feedback in there. This was perfect. Don't miss this one. Keep doing it. Sometimes there may be a lesson on management. Sometimes there may be a lesson on the chart read. Sometimes there may be an early entry, a late exit, opportunities. Hey, Chariot, great to see you. You will get that feedback every day. And if you put it into your spreadsheet, come back and study it in the morning. Get focused on what's good, what's bad. The other thing is simplify, guys. Now, this is one of the things that I'm very passionate about. As you learn the software, don't make it difficult. As you learn the software, focus on one trade. And it's one trade that only has 3 rules. And those 3 rules happen on only 2 charts. I hand you a plan, and I did in the room already. I hand you a plan that is the most basic approach to trading the software, whether it is NinjaTrader or TradingView. It has the rules for you. This is TradingView. Tells you where to find them. Gives you a checklist for entry. The same is true on NinjaTrader. It gives you, that's on the wrong one. Let me cut that off of there. It gives you the rules, where to find them, and a checklist for entry, and even a little bit about management. Let me put this in here. I actually put that on the wrong plan. I did a lot of work over the weekend for you guys. There we go. So simplicity tends to pay dividends. So keep it very basic. And the high probability trend trade that I talk about in this room is not the only trade, guys. This is the first trade. This is your foundation. This is a trade that teaches you to read your indicators. So this is for my ninja people right now. This is for my Daniels, my OGs. Papa, you are on TradingView, so we're coming up to you. But guys, this is the one that teaches you to read your indicators and make great decisions, because a trade is 3 advantages. And these 3 advantages come from the rules being met. It's only 3 rules, and it only takes 2 charts, a big chart and a little chart, to recognize these advantages as true. So your first rule, when true, provides the advantage of momentum, guys. Momentum is amazing. It means that you have an established trend and there's so much push behind that trend that it's going to be difficult to stop. Rule number 2 says that there's nothing in the way and you have room to make money. We just call it a clear path. Once you see these two, once you understand these two, you're going to find a lot of opportunity in the market. There's no doubt in my mind. Your first entry is rule number 3, and that's defining the highest probability trend trade. Now, we said that the market tends to establish a trend, and there's almost always a fight. These two charts show you the trend. The large chart will show you the direction of the market, give you the trend is your friend feeling, which way I should be looking for rules to be met. It will define the momentum in the market, letting you know if that advantage is present. It'll also define the areas that can be problematic. And guys, it takes one bar on the large chart to get this work done. That's it. So if I'm looking at the most current bar, and this is what a most current bar looks like in a live market, I can use this bar and I can define momentum, I can define direction, and I can see the areas that may be problematic, that may be targets. All of that happens just inside of one bar. Now, inside of that bar is the fight. You can't see it on the big chart. It's a slow chart. It's a broad stroke of a brush. Your rule for entry is defining exactly where that fight is most likely to be lost. That's where the market is most likely to continue with every advantage your large chart is giving you. This is your entry chart. This is your reason to look for an entry chart. And we're going to go over the indicators real quick so you know exactly what you're using to recognize these 3 rules to take the highest probability trade ever. So trigger lines. You're going to see these on the large chart and the small chart. And guys, I'm gonna say this once. I'm going to try not to beg you guys to ask for help, but if you have a question about anything I'm saying, let me know. I don't have a time schedule. I would rather you get clarity than me get through a syllabus, right? I can do this all day. There are small triggers. There are going to be 2 solid lines in NinjaTrader. When they are going up, they'll be green. When they're going down, they'll be red. Small triggers are a fast-moving average. You're also using large triggers. Large triggers are your slow-moving average. When they're going up, they're green. When they're going down, they're red. The same is true of the background on your large chart. It defines the trend direction. If it is green, the market is going up. If it is red, the market is going down. So trigger lines, small and large. These will show up in everything that you do. Trigger lines will define momentum, making sure that rule number 1 is met. Trigger lines will be used to define termination conditions, areas that can stop the market, making sure that rule number 2 is met. Large trigger lines are how you are going to pinpoint your entry, making sure that rule number 3 is met. Triggers show up in everything you do. And then the second set of indicators, we're going to call them areas, and we're going to use it as a broad term. Areas are going to be horizontal lines on your charts, large or small. They all have names. You're going to see a magenta line print from a high pivot. This is a divergence high. Anytime you hear the word divergence, I want you to think loss of momentum. If the market is moving up, if the buyers are in control, and the sellers steal their momentum, you're going to see a magenta line. If they do it at a low pivot where the sellers are in control and the buyers steal their momentum, you'll see a cyan line. These lines become like lines in the sand, and on a large chart, they can stop a trend. You're going to have a recipe to know when it's most likely. You're going to see Fibonacci resistance in an uptrend. Resistance can stop a market, create a bounce. This is where the market may reverse. Fibonacci support in a downtrend. Yellow 1-to-1s. If the market is moving up towards the yellow 1-to-1s, they can behave as resistance. If the market is moving down towards yellow 1-to-1s, they can behave as support. So what we're going to do is we're going to say divergence highs, Fibonacci resistance, Yellow 1-to-1s. In an uptrend, these are all areas of resistance. They could stop the forward progress. In a downtrend, divergence lows, Fibonacci support, and yellow 1-to-1s. They will all act as support. And in a downtrend, they can stop, create bounces. Is everybody good with that? It's just indicators. Trigger lines, areas. That's all you need. Everything starts with strong triggers on the large chart. Everything begins with strong triggers, providing you the advantage of momentum, guys. So there's those small and large triggers again. If the background is green and the trend is up, the only way rule number 1 can ever be met is if your small triggers and your large triggers are green as well. If the colors don't match the background or one another, the advantage of momentum is not on the table. Rule number 1 is not met. Strong trigger lines is only one look. When the background is green, when the small triggers are green, when the large triggers are green, all you need is space between the two. Small's above the large, larger wide, everything's going up, guys. When you have this look, the triggers are strong. When the triggers are strong, the odds are favorable for the market to continue up. Odds favorable momentum is one of the things you're going to see in class. Odds favorable momentum is what pushes a market in the direction of the trend. Odds favorable momentum can break key Fibonacci areas. Odds favorable momentum is hard to stop. And it's only one look. And I like to say, if you're a visual person like I am, strong triggers looks like open scissors. That's it. You can cut. In a downtrend, when the background is red, small's below the large, large or wide. It's that space that lets me know there is strength, and it looks like scissors that are open, guys. And when scissors are open, they can cut you a check. Separation is strength. It's only one look. It has nothing to do with price bars. It has nothing to do with areas. Strong triggers is nothing more than the two triggers separated from one another. And if you look at a large chart, on the very first bar, you can say without any hesitation, there is no separation. Do you guys see it? So Daniel, can you see that the small and the large are still together? That's where we had momentum. Here we don't have separation. Everything is red, but without separation, it's weakness. It's weakness in the triggers, guys. And when I have weakness, anything can happen up or down. The market may retrace from the middle and nowhere. Key Fibonacci areas are more likely to hold. So if you are a brand new user, the easiest way to get to where you want to be is let it be momentum. Trade with the trend, a market that's difficult to stop. And when there is no momentum, it's okay to sit on your hands, to do nothing, to relax. 90% of your day will be doing nothing, guys. 90% of your day will be waiting for these rules to be met. So on the large chart, strong trigger lines, advantage of momentum. Can you guys give me a why if you're with me so far? Rule number 1 tends to be the easiest lesson that you're ever going to get. Once I have momentum, once that market is hard to stop, guys, once everything is screaming in the direction of the trend, I have to make sure that there are no termination conditions. I have to make sure that there's room to profit targets, guys. The whole goal of trading is to get paid. It's hard to get paid into areas that may stop the market. We want a clear path. Well, a clear path means that the market hasn't gotten to one of these areas. All of these areas can behave as termination conditions. It can be divergence highs and lows. It can be resistance, support, yellow 1-to-1s. Guys, the people in control of the market, the men and women that make it go up and down, they react at these key areas. They know about them. They created them. So in order to define a termination condition, it's just a two-part process. The first one is that you let the market get to trouble. Or if the market's not at trouble and you find an entry, then you trade to trouble. So if price reaches resistance, if price reaches a divergence high, if price reaches yellow 1-to-1s, All you have to do is ask yourself, where are my triggers? If your triggers remain below any area of resistance, that area is a termination condition. Price reaches and it sets off the decision-making process. Are the buyers going to continue? Are the sellers going to take over? I don't know. And every time price reaches resistance, the market may reverse, the market may bounce, the market may break. I'll never know what the reaction is going to be. So rule number 2 says, be calm. Wait for the reaction. Let's let the people in control make a decision, and then we'll latch on to their decision. The same is true when price comes down and reaches an area of support. Fibonacci support, yellow 1-to-1s, divergence lows. All you have to do is ask yourself, where are my triggers? If your triggers remain above support, support's a termination condition. Just don't initiate a trade into the area. It could stop the market. It could create a bounce. It could break. I'll never know what the reaction's going to be. And what you will find is that resistance, when the triggers can't break, is more likely to hold and create a reversal. A divergence high can do the exact same thing. Fibonacci support, Fibonacci resistance, Fibonacci resistance, Fibonacci support. How cool is that? You guys know exactly where the market may stop. You guys know exactly where the market may bounce. Now the hard part is doing absolutely nothing when there's absolutely nothing to do. Guys, 90% of your day is sitting on your hands. 90% of your day is being patient. But if you learn this one little recipe, price reaches an area, no triggers break, no trades. Price reaches an area, no triggers break, no trades. This is a large chart, Alex. But Alex, you're on TradingView, right? So this is not your lesson. This is NinjaTrader. When we get to the TradingView lesson, that's where I really want you to perk up your ears. And guys, that's one of the things is NinjaTrader and TradingView, they're just different. They are apples and oranges. NinjaTrader uses dynamic Renko bars. They're faster than TradingView. NinjaTrader uses Fibonacci. TradingView doesn't. TradingView uses minute bars. They're slower. There's different rules. So make sure you know which platform you're working with. Right on. Good stuff. Guys, if that termination, let me ask real quick, is everybody good with that? Price reaches an area, no triggers break, no trade. Pretty simple, right? If that area reverses the market, guys, we call it a strong top or a strong bottom. And what a strong top or bottom means is that the buyers were in control, they couldn't be stopped, that life was good, everything was perfect. Then they hit Fibonacci resistance, and either every buyer jumped ship or there were twice as many sellers and it reversed the market. A strong top or bottom typically creates a larger push the other direction. A strong top or bottom is the precursor to the highest probability trend trade you could ever take. So areas hold, areas break. I want to go through the process of an area breaking because they break all day long, but it goes right back to language. If price, these Renko bars, reach Fibonacci resistance, when they reach resistance, we are done with price. Price is no longer a factor. The burden of termination relies 100% on the triggers. And if price reaches resistance and the triggers are still below, it's a termination, guys. No trades into the area. There's no reason to initiate a trade right here hoping that red line breaks. 60 to 70% of the time, it won't. It'll do exactly what you see right here, and that's an avoidable loser. If your small triggers absolutely smash through that area with momentum, now the area has the potential to break. And it's only the potential. It's still not broken. Your path still isn't clear. The second trade on the plan that I gave you guys for NinjaTrader revolves around the potential to break. And it tells you if you really want your best shot, let 3 of your trigger lines get through. 3 of those moving averages break above resistance. That is the plan. That is the trade. It's a medium probability trade, and you're going to have to manage it a little more assertively. But once all 4 trigger lines break above resistance, resistance behaves as support, guys. When an area breaks, it flips its role. Now your path is clear. Rule number 2 is met, and with that momentum, you're going to look for an entry. And the same is true going the other direction. Every line you hit will be a termination condition, at least for a moment. If you're already in a trade, what a great target. But if you're not in a trade yet, it's okay. Sit still. Wait for the reaction. Once the small triggers smash through, as long as you have momentum, it has the potential to break. But an area is not considered broken until the trigger lines break. Now, this is different than TradingView. TradingView users, cover your ears. Once the path is clear, guys, support becomes resistance, and your path is clear until you reach the next area. Once you reach the next area, you have to go back to number 1. So if we go to the live market again, boom, 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 I'm going to get off of crude oil and I'm going to go to the S&P because it moves a little bit more. I want you to see some pretty cool stuff. With weak triggers, the market reverses from nowhere as advertised. With momentum, areas begin to break. When price reaches that yellow 1-to-1, that tail is a reaction from the area. And then with weak triggers, it retraces all the way back to those 1-to-1s that are no longer resistance. They're now behaving as support. Price reaches a divergence high and the triggers don't break. And the market comes back and tests that area one more time. And all the triggers are above. And sure enough, the market continues up. All the momentum, potential to break, it does. As it begins to weaken, there's Fibonacci resistance, a big untradeable bounce. And currently, the market is above areas. It hasn't reached areas, but I don't have the momentum I need to say that rule number 1 is met. Guys, these areas are effective because they are created by the people that move the market. They are all based on historical moves where the market has retraced, where it has bounced, where it is corrected, and it comes forward and it gives you a roadmap for where highs and lows can be. Now what we're doing is we're not trading directly into areas because they can mess up our good time. We're going to let areas break. And what happens is there's going to be times when your areas are stacked. There's going to be times when your path isn't clear. And this is 90% of your day, and I can't stress this enough. And write it down. Tattoo it backwards on your forehead so you can see it in the mirror. Guys, 90% of your day is doing nothing. 90% of your day is sitting on your hands, playing solitaire, waiting for the advantages you need to provide an edge. That's okay. The futures markets, on average, trade $220 billion hourly. The S&P typically exchanges $174 million a day. The NASDAQ is like $269 million exchanged a day. One of the things that new users tend to forget is that you don't have to make all the money to make all the money. Find a way to make $500 a day, guys. And if you multiply that by 252 trading days, that's $126,000 a year. Well, Nexgen Pro Trader Funding has a copier, and there's a lot of copiers available. What if you take that 126, a simple $500 a day, and you mirror it on 5 accounts? You're over $500,000, guys. Most of us could live pretty comfortably on $500,000. The goal is that you're not looking for every move, that you're not latched on to every tick, that you find the best moves, the moves that provide an edge. And then that just takes us to getting into the market. And one of the things that I do in this room is all I do is bring you to the entry first, because great entries create manageable trades. So when I have momentum, I have a market that's going to be difficult to stop. When I have a clear path, there's nothing in the way to create a bounce. Guys, this is your foundation. This is the core of everything that we teach. Once I have that, I'm going to go to the smaller chart, the faster chart. and I'm going to define my entry. You're going to define your entry. I want you to learn this language, and I'll even drop it in the room. I put it on a Word document. It's so important. Your entry is so specific. Your entry is so precise that you're going to use a limit order to buy or sell a pullback. Now, a pullback is that fight, that little fight from an established trend. It's a small move counter to the underlying trend. You're going to buy or sell that pullback at an area. Areas can be Fibonacci support or resistance, yellow 1-to-1s, or mid-bands. And that area will be inside of triggers on your small chart. Large triggers show you where the area needs to be so you can take your best entry. So we're going to go through an entry sequence. When the rules are met on the large chart, and in this case, the large chart would have said up, the large chart would have had momentum, and the large chart would have had nothing in the way to provide a clear path. I'm going to turn my attention to the smaller, faster chart, and the first thing I need is a reversal bar. That's the visual that the pullback is starting. And once I get that reversal bar, I'm going to identify, you're going to identify and know without hesitation where the retracement is most likely to go. Price returns to large triggers. You have two sets on your small chart. You have smooth and stepped. They're both large triggers. They're from both time frames, and they will define your retracement. You have large triggers, synthetic triggers, from the highest line of those triggers to the lowest line of those triggers. This is where the market is most likely to retrace. Trigger lines do not define your entry, they define the retracement. The tighter they are one on top of each other, the smaller the area becomes. That'll help with accuracy. But trigger lines are not your entry. Your entry comes from areas. So when you identify your trigger lines, you understand where the market may return. But you need an area inside of those triggers. Fibs, mid-bands, yellow 1-to-1s, inside of triggers. You're going to hear that 100 times. This little white box from the highest area of support inside of triggers to the lowest area of support inside of triggers shows me precisely where the market is most likely to bounce and continue in the direction of the trend, of the momentum, of the clear path on the large chart. With a little bit of study, you will find the courage to activate a limit order about 2 ticks above the highest point of support inside of triggers. And now you've done all you can do. You'll never be in control of whether the market goes up or down. You'll never be in control of whether an area holds or breaks. The only thing you will ever be in control of is whether or not you follow the rules that you can prove win more than they lose. If the market comes to your limit order, you're in a long position. Now, you're in a long position not just hoping that the market goes up. You're in a long position where you have the advantage of a market where the odds are favorable for it to continue up because of those strong triggers. And you have the advantage of a clear path, giving you room to your targets because there are no termination conditions present. And you have the advantage of having entered precisely where the market was most likely to continue up with the trend. This is your high probability trend trade entry, guys. This is a pattern that repeats itself every day. This is a pattern that repeats itself on every market. This is the S&P. These tails are potential entries. These tails are the pullback on the smaller, faster chart. So when the large chart says up, when the large chart has momentum, when the large chart has a clear path or at least the potential to break, it's trading all the way up here at 97.05. This is where the entry pattern starts. It begins with a reversal bar, but the reversal bar is not your entry. When the reversal bar prints, you'll say the market is most likely to retrace somewhere from the top to the bottom of the triggers. but that's not your entry. Your entry comes from the areas inside of those triggers. That's your bounce spot. That's your trend trade. That's the pattern, momentum path entry. On your large chart, it looks like a tail. It looks like that it pooped a black tail and then headed off to the target. That tail is this retracement. We don't trade tails, but we can use them to study. If you go back on your large chart and circle tails when you have momentum, when you have at least the potential to break, I'm going to show you what those look like on a smaller, faster chart. Pulls right back about 2 ticks above a mid-band inside of triggers. Pulls right back, doesn't quite make the areas, but there's your pattern again, guys. This is a pattern that is repeatable. This is a pattern that you can prove wins more than it loses. This is a pattern that gives you the ability to focus on the execution of the method, because the method creates the edge. And when you have an edge, probabilities say you're more likely to win than lose. So live chart read. I have momentum. Does everybody see it? Smalls below the large, space between the two, takes the first bar to give me rule number 1. I've got 2 triggers through Fibonacci support, 3 triggers through Fibonacci support, but price just reached a divergence low. We're watching areas break live as the market opens. Smalls below the large, 3 triggers through. Guys, if I got a pullback right now, it's that mid-band inside of triggers, and it's just not inside anymore. But that's exactly what the market's going to look like. And you can say, I have momentum. My path is clear. It has the potential. Or you can say, I'm losing momentum. I don't have an area inside of triggers. And guys, trading is having an edge. And when you know what's working for you, and you know what's working against you, you're going to make decisions on your entry. You're going to know how to manage it. But you've got to learn these basic concepts first, and your chart reads will happen really fast. There's price reaches yellow 1-to-1s. The triggers are still above. This is my cue to pause, to wait, to see what the reaction is going to be. Are there any questions about the high probability trend trade? Guys, I'm going to give it to you one more time here. This is the KISS plan for NinjaTrader. If you are brand new, once you learn the high probability trend trade, what you'll find is that the rest of the trades just kind of jump off the paper. Here we go. I'm also going to give you guys, this is a tracking sheet for NinjaTrader as you learn the high probability trend trade. This sheet actually gives you strong triggers and about 50 pictures, so you can learn rule number 1 and make sure that it's always there. It gives you pictures of a clear path, making sure you know the recipe completely and effectively to make sure you're not trading into areas that could stop the market. It even gives you entries, guys. And because if 90% of your day is waiting for advantages, it's important that you understand when the triggers are weak, when they're not strong, when the path isn't clear, when termination conditions are present. There's also probably a little over 400 pictures of that one pattern for you to study. There's entries, there's management, there's patterns that repeat themselves, a place to build yours, and even a trade tracking sheet, guys. One of the things that I do every day is I literally give you everything that you need to be successful with the software. The only thing I don't give you is the experience. Price reached yellow 1-to-1s. None of the triggers broke. Look at the reaction coming off of that area right now. Just boom. Beyond the retracement zone, beyond the areas, continuing up. Why? Because we reached a termination condition. We knew about it. We knew it was there. We have a recipe to not trade into it. And if you took a short from the mid-band, you're probably regretting your decision right now. That's okay. Take a picture of it. Drop it in the room. Let's see what you did, and let's talk about it. So I'm going to ask one more time. Are there any questions about momentum? Are there any questions about defining your clear path? Are there any questions about defining your entry? Guys, what we do, if you keep it focused, can be learned in a couple days. It'll take you a couple days to learn the language. It'll take you a couple days to learn the looks. It'll take you a couple days to learn the pattern. And then you're just going to keep reinforcing the lessons until it becomes easy. If you're on TradingView, we're going to go through the TradingView rules right now. Let me start my slideshow. Once again, guys, it's only 3 rules. I can't stress this enough. Trading doesn't have to be difficult. You've just got to learn some basics so that you can get to where it is you want to be. These 3 rules, sorry, I'm trying to set it up here. A trend trade is the 15-minute not trading into areas, the 1-minute not trading into areas. How cool is it that you know what not to trade into? And then defining your entry. These 3 rules, and we're going to break them down individually, happen on only 2 charts. That should sound familiar. Guys, the 2 charts are very different on TradingView. So, iPapa, this is you. Alex, this is you. If you're on TradingView, guys, I'm about to give you the keys to the kingdom. And here's the cool thing, is what I'm about to teach you is absolutely nothing new. What I'm about to teach you is the same methodology that Nexgen was teaching in 2004, 2005. There is nothing new about this, guys. This is the same idea that the market establishes a trend and that there's almost always a fight. We're pinpointing where the fight is most likely to be lost. So your 15-minute is a big slow chart, guys. A lot happens in 15 minutes. It'll define direction. It'll give you insight on the momentum, targets, and terminations. 15-minute does the heavy lifting. Your 1-minute chart, your small chart, this is going to define the immediate strength with the small triggers, and it's going to define entry points. So let's talk about indicators. On the large chart, guys, 15 minutes, cyan is up, white is down. Pretty simple, right? Only one set of triggers, small triggers. They're up and down. On the 1-minute, we do incorporate the large triggers so that we can establish momentum. Same thing. Up is green, red is down, up is cyan, down is white. So they're either going up or they're going down or they're not going anywhere. And then TradingView uses areas. So here's the T3 indicator areas, guys. Divergence highs. There was a loss of momentum at a high pivot. Divergence lows. There's a loss of momentum at a low pivot. Guys, these can be used for targets and termination conditions on the large chart. 1-to-1s, magenta or yellow, can be used as targets, terminations, or entries. Mid bands are in there as well. And the one thing that you're going to see are these outer bands. I put too many T's in there. These are points of exhaustion. These can be used as targets and termination conditions. You're also going to see the mid band. It can be used for entries. It can be used for terminations. All you need to know is that they're areas. Areas can create bounces. Some of you have Chart Prime. I personally use Chart Prime. It's $50 a month, worth every penny in my position. It gives areas of supply and demand that can be used as support and resistance. Not everybody wants to spend the money as you evaluate software. There's free options. There is Flux Charts offers support and resistance lines. I've seen some of you post these in the room. This is a free version of areas that could stop the market. There's also free version, I believe from Algo Alpha, of supply and demand. I can get you that if you need it. But what we're going to do is we're going to use triggers and area, and we're going to define a trend trade, guys. The market creates a trend. Somebody fights the trend. We're going to pounce on them when they do. That's all it is. So your trend trade rules. The 15-minute can't be trading directly into areas. We must have room to targets. The 1-minute is not trading directly into areas. We have to have room to targets. And then we're just going to define our entry, guys. We're going to buy or sell a pullback. That's the fight. We're going to do it in an area. And we're going to have a little different entry rules. We're going to wait for a close on the correct side of the triggers. So let's define direction first. Guys, direction is not a trade. Direction is up or down. If my small triggers are up, I'm only going to look for rules to be met for long trades. If my small triggers are down on the large chart, the 15-minute, I'm only going to look for short trades. Pretty simple, right? Open up TradingView. In the moment, the small triggers are down. Do you guys see it? They're kind of behind a bar, but they're down. Look what the market's doing. It's going down with them. And the whole time they were up, that market ended up going up. So this is right off the open on NASDAQ. Good stuff. Up or down? Let it be simple. Once it's up or down, the first rule says on the 15-minute chart, I must have room to trouble. So if they're up, from wherever I'm going to take my entry, I have to have room to the first sign of trouble on the large chart. Does that make sense to everybody? Triggers up, room to target. That's perfect. Let's go look for an entry. It's that simple. Up, room, go to the 1 minute. Rule number 2 says that the 1 minute must have room to targets, whether it's up or down. I've got to have room to make money before I hit something solid. Is everybody good with that? So if we go back to TradingView, the triggers are down. I have absolutely no room on the 15-minute chart, which means I can't think of a good reason to look for an entry on my small chart because I no longer have an edge. I no longer have an advantage. So rule number 1, don't trade into anything. Rule number 2, seriously, don't trade into anything. Rule number 3 says let's take advantage of the fight. When the large chart says up, when the large chart has room, your trend trade entry looks the same, whether it's up or down. Your small triggers on your small chart will roll down against the uptrend. You're going to wait for a pullback to an area, to a 1-to-1, to a zone, to a mid band. And you're not just going to enter. Sorry, I got to answer a question real quick. And once you get to that area, you're not just jumping in. It's not like NinjaTrader where you're going to buy or sell and wait for it. You're going to wait for price to get above those small triggers. Or if it's a short trade, you're going to wait for price to close reversal bar below those triggers. And what you're doing is you're taking that immediate strength and getting to the productive side of it, guys. So price pulls back, hits a mid band, and I don't just jump in. I wait for an up bar that finishes on the correct side of the small triggers. This is how you're going to define your entries. When the market says down, it's only shorts. When there is room to trouble, I've got room to make money. Here it comes. There's the pullback. There's the area. There's the close below. And since I'm waiting for the close below, my entry is going to show up on the next bar. And sure enough, down it goes. The triggers are up. There's room to targets. I'm waiting for the pullback to the area. There's the close above. That's where reversals come from. We're allowing the small chart to reverse to go in the direction of the large chart. You guys good with that? This happens every day. When the triggers are down, I've got room to trouble. On my small chart, I need a pullback to an area and a close below. But Mark, look at all the zones. Guys, that happens during consolidation. 90% of your day is doing nothing. This is one pattern that's repeatable, one pattern that's definable, one pattern that makes it easier for you to take advantage of that small fight so that you can trade with the trend. If you learn this one trade, You'll be able to define direction in a fraction of a second. You'll be able to define room to targets in a fraction of a second. You'll know exactly where your trades come from. You will call your shots, and you'll develop the patience to wait for the entry, guys. And then once you're in, you're going to have to manage that trade. Management is where fortunes are won and lost, guys. But great entries create very manageable trades. So on TradingView, you're going to define the direction. You're going to commit to trading with the direction. It's a path of least resistance. You're going to have room to trouble. It's going to make life easy for you. Nothing in the way to create a bounce. And then guys, this is your management plan. This is the beginning of your management plan. After you define direction, I want you to ask yourself, where is the current price in relationship to the triggers? So here the triggers are up. I blew up the picture a little bit. There's only three options. You're either left of the triggers. That's the strong side. This is where 1 minute areas are most likely to break. This is the look that says, hey, maybe we're going to hold for a bigger move here. You could be to the right of the triggers. This is the weak side. This is where reversals come from. This is where 1 minute areas are most likely to hold. This is where I get paid at areas and get out of the trade and just wait for the next trade. Or it can be inside in that transition look. And that transition look says, hey, I want you to be aware of those 1 minute areas. Maybe get paid, get to break even, right? They could still hold, they could break. I'm just not sure. We're kind of in transition. And guys, on your large chart, you can be in all three spots on one bar. So where are you from the point of entry? It's going to help you manage that trade. Some trades, getting paid makes the most sense. Some trade, protecting yourself, break even, but letting it run makes the most sense. You'll know exactly how to manage that trade before you ever enter the trade. You'll be able to gauge targets because you'll see them on the 1 minute chart. You'll see the bigger targets on the 15-minute chart. So the current read, the triggers are down. I'm only looking for shorts. I'm on the strong side of the triggers, which means got a better chance of making it down below. I do have room to trouble. And here comes my pullback, and they're pulling right back to a zone. But I need to be in on the other side of those small triggers. I need to not fight those triggers. So until I get to the good side of those triggers, guys, I don't have a trade. And that's it. I'm okay not having a trade. 2 triggers through, 2 triggers above. Look at this. They tried and failed. They tried and failed. They tried and failed. 3 losses of momentum right in that same range, guys. There is a fight. And that fight is happening right at this fib. You don't have to take a trade and hope. Just let it break. Let it get below. Let the momentum pick up. Get 3 triggers through. Look for your opportunity. Trading is a game of waiting. Successful trading is the most boring endeavor you will ever be a part of. But it's the endeavor, it'll absolutely change your life. It'll change your quality of life for the better once you get good at it. So, guys, that's both platforms. I go through them every morning. I tried to go through on the weekend and simplify things even further for you. And I'm kind of the opinion that I already had it about as easy as it could be. I'm going to give you the PowerPoints that I use in the room. This is your Trend Trade Simple. That's your Ninja Trader. That's the PowerPoint that I use to go through. Where's Trading View? There's your Trading View. There's the PowerPoint that I used. I'm probably going to go back to the one that I had. There is your Trading View plan, getting you into the highest probability trend trade, giving you a checklist for entry. There is your Ninja Trader plan, giving you the highest probability trend trade, a checklist for entry. The PowerPoint for TradingView or for Ninja Trader is based off of this 2-page document with your rules, your charts, your indicators, each advantage broken down all the way to entry. The PowerPoint mirrors this, guys. It can be broken down into two simple pages. I built the same thing for TradingView. Your rules, your charts, your indicators, defining direction, areas that can stop the market, how to define an entry, even going into management. Guys, everything that you need to be successful with this software has just been laid in front of you. Everything that you need to have an edge, to have an advantage, to take a trade that you can prove wins more than it loses, has been laid in front of you. You now have rules, but it's going to be your responsibility to learn those rules. And as you learn the rules, I am on bended knee, clasped hands, begging you, give me the opportunity to help you. Post in the room. Tell me what you see. Give me your chart read. Talk about what you did, where you did it, why you did it. I promise I will give you everything in my arsenal to do it better if there's a way to do it better. And if it's already done perfect, we're going to virtually high five, guys. I celebrate victories. That's my favorite thing to do. The other thing is you're going to have this fear of missing out when the market is moving and you're not in it. You're going to have this feeling of being left out when people are posting winners in the room and you didn't find a winner. Guys, keep it very, very simple in the beginning. Learn to focus on the simple advantages that produce the results. For the high probability trend trade, guys, the perfect trade is always momentum, path, and entry. This is when each indicator on every chart agrees with the rules for the trade. This is the best of the best. This is a trade that you can prove wins up to 70 to 80% of the time, which means you will lose 20 to 30% of them. Don't focus on the result of your trades. Focus on the execution of the method. And remember that trading isn't about the one trade that wins or loses. It's about the sample, the 20, the 30. And what is the big picture? If you learn to read your advantages, you'll notice when one goes away. If only one goes away, it puts you in a medium probability trade. A medium probability trade means that most of your indicators line up for a trade. However, an issue exists. If you're following the NinjaTrader KISS plan, this is your potential to break trade. You'll also be able to look and say, wow, 2/3 of the good stuff is gone. That's low probability. Maybe I choose not to enter. Maybe I choose not to risk my money based on a low probability scenario. Guys, you are in control of the entry. Nobody can make you get into the market. You will be able to know what's working for you and against you, and that's what helps you make the decisions. Will I enter? Won't I enter? How assertively, how aggressively do I need to management? And guys, once you get through this very, very basic, the door is open and the keys to the kingdom are there and the golden goose is present and you're going to see more trades. You're going to see momentum trades. You're going to see counter trend trades. You're going to see all the other options and they're all going to be rooted in momentum, path, and entry. If you are on TradingView, direction, clear path, and an entry, that's the recipe. Trading with the best of the best. When one goes away, hopefully not direction, it's medium probability and then goes to low probability, guys, and you're in control. And now you have a plan. You have everything you need. The only thing I need out of you guys for the rest of the day is just play along. I'm going to go through. And guys, it's split volume, contract roll. The market's moving slow. If our rules are met, well, we just missed it. For a high probability trend trade, if there is momentum, if there is room to trouble, where's a fib? We don't even have one. And we're cleared. Does everybody see? And this is so important if you're brand new. I don't have to go back. It just pulled right to an area, right inside of triggers, and it's going down with momentum. Daniel 3. This is your pattern as a brand new user, and from this stems everything else. Who's a NinjaTrader and brand new? Guys, this is it. That's the one. This is everything that we've talked about for the last hour. And if you took an entry at 43.75, down there at 39.75, if you're following the KISS plan, that was your $300 trade. That was $300 in the bank over the course of a minute or two, based off of two advantages on the large chart, One advantage on the small chart. 3 rules, 2 charts. Guys, that's the money. If you start looking for everything instead of the best, it becomes more difficult. Golly, I love it when the market does that. Still waiting for support to break on crude oil. From the strong side of the triggers, they made it to the bigger chart. There was your pullback to the zone. There was your close below the small. The challenge is there wasn't any room. And sometimes you just got to sit still and wait for the best of the best. So as we go through the rest of the day, guys, this is how it's going to work. If the rules are met for the KISS plans, we'll pull the trigger. We'll manage. We'll trade live together. I love it. Knock on wood. I've had a good 2 weeks. We haven't had a losing day in the room in 2 weeks. We've taken losers, but we haven't had a losing day. So hopefully we can keep the streak. I probably just jinxed it. The other thing we'll do is I'll give feedback on the charts that are posted. And guys, I'm not the trade police. If it doesn't fit the KISS plans, it's okay. Write your rules on the chart. Tell me what you're doing. Tell me what you see. Tell me why you did what you did. And what might happen is I just may see a way to do it better. We'll talk about it, right? If you're trading into a termination condition, I'm going to make sure you know you're trading into a termination. If you jumped in early, we'll talk about it. If you jumped in late, we'll talk about it. But I'm not telling you what to do, but I will tell you how to do it better if you post in my room. It's hard. The first post is the hardest post, but it gets easier. I am definitely warm and fuzzy. My only goal is your success. We can get there faster if you just show me what you're doing. So I'm going to take 5 minutes. I'm going to stretch my legs, guys. When I come back, I'm going to click on every chart posted. We will talk about everything that I see, everything that you've done, and then we will come back and we will look at the live market and we'll see if we can get rules met. And we'll just keep reinforcing the rules until they stick. So go stretch your legs, guys. If you have a question, post it. If you have a chart, post it. I'll be back in about 5 minutes. All right, guys. So I am back, and we're going to go through it just super basic. I'm going to take a picture of both charts on the S&P right now. And it's changing fast, and that's okay. And I want you to see something. This is how you can think every time you look at a chart. And I want you guys to do this. And trust me, this is going to pay huge dividends. And if you really want to make life easy, and I know that most of us don't, we want it to be difficult, take this picture, print it out, and grab 3 pieces of paper. And every time you are looking to take a trade is momentum, it's a clear path, and it's an entry area. And I want you to look at the most current bar. And now we're going to go through and we're going to see if the first lessons stick. Guys, there is no separation between the small and large triggers. Does everybody see it? And momentum is defined by space between the two. Does everybody see that I simply don't have the advantage of momentum? Can you give me a Y or an N? Don't be afraid to play along. And the cool thing is if you make a mistake, we get to fix it. Thank you, Alex. My TradingView people are telling me. All right. The second one is it has to be a clear path. Well, price has not reached an area, which is awesome. There's nothing in front of us. And it's cleared anything above us. Guys, we have a clear path 100%. So right now on our large chart, we've got about 33% of our advantages. Now, if we can define an entry, if we can use the entry rules, and let me write them down because I think this is so important. An entry is a pullback at an area inside of triggers. And if you learn that one magical phrase, a pullback at an area inside of triggers, I want you to see something. Here's your triggers. There's your area. So rule number 3 is not met. I don't have an area inside of triggers for the pullback. And guys, once you get beyond those triggers, you don't know if, when, or where the market's going to continue down. So if you were investing for your children, if you were investing for your parents, if you were investing for E.F. Hutton, are you comfortable risking your money with 66% of your advantages gone? And that's a question only you can answer. The methodology, the simple rules are designed to keep you out of opinions. The simple rules are designed to give you trades that win more than they lose. The simple rules are designed to keep you on the good side of things. And that's it right there. Avoidable loss, 100%. And then with momentum and path, there's your pullback to the mid band, and sure enough, it goes up. Pretty cool, right? This is what we do every day. So I'm going to scroll to the top of the room, and I'm going to look at the pictures that are posted, and there's really not very many, to be honest with you. We're just going to see what happens, what you guys are doing, what you guys see. Dun, 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 dun. It is definitely volume split. There's like 10 pictures. I do them in order always. Let's see what's going on, guys. Trend trade. Triggers are up. Price is on the weak side of the trigger, so he's already focusing on his management plan. Space to the next area. There you go. Small chart. Price pulls back to the area, so you can't see it in here. One of the things about historical pictures in TradingView is things may shift. So if I were being a stickler, if I were the trade police, no, you're fine, Victor. I would say, Victor, there's no area here, and trades come from areas. But Victor told me, he goes, Mark, I had an area there, and then it just kind of shifted. And that happens from time to time. That's okay. So I'm going to draw Victor's area in for him. The market pulls back to the area and closes above. Now, of course, I would say, Victor, you're trading directly into areas. There's no room on the 1-minute chart. Victor said that area wasn't there in the moment. I'm like, okay, that's cool. But you still, Victor, the one-to-ones were, which means at your point of entry, it was really tight to those one-to-ones. That's okay. Take and manage. And then the market breaks away and it pulls back to the area again. And then that's the easy one, the close above, and that's the one that rockets off. Large chart targets at 72. I'm not sure why you got out of the trade, but it's a great looking trend trade. And I think after sitting through all of that, you're probably exhausted. But large chart targets were 72. There was nothing on the small chart to suggest anything was going to stop. Everything was up. Great way to make a little more money. Nice trade, Victor. Wayne, trend is up. Strong side, room to targets. Closed above, that's where it broke the zone. That's where it pulled back to the zone. There was the close above right there. And then sure enough, it goes up to trouble, Wayne. Nicely done. You weren't on yet, so you're like, whoa. I got a little late. I just opened it. I can still make money. Nicely done. Momentum, first trade of the day, strong top, termination that reverses the market, rolled down, separated, odds favorable momentum, 2 triggers through, pulls right back to resistance inside of triggers. You were still sleeping there, so you get in late. Guys, do you see how there's the perfect entry? I'm going to show you one of the cool things that happens with a little bit of study. This is where the trade happened. With this look, Pete knows this is the expectation for that trade, going down to the next key area. That's the best entry. Pete says, you know what? I'll just get it late. I've got tons of room, and I'll still find a way to make money. Really nicely done, Pete. Wayne, I'm going to paraphrase, and I know Wayne's not in the room, but Wayne's triggers say up, there's room to everything, and Wayne does 1,000 things, every one of them up. He just jumps in and hits something, and then he just jumps in and hits something, and then he just jumps in and hits something, and jumps in and hits something, and jumps in and hits something. And when everything says up and he's on the strong side, he's just going to keep jumping in long, trying to make a couple bucks, get out. Is it a high probability trend trade? No. Does it trade into areas? Yes. Did he pull it off? Sure did. Because he's trading with the large chart. He's trading with the direction of the large chart. He's trading from the strong side of the triggers on the large chart. And he's finding a way based off of the 2 concepts that we teach every morning. With trend, with trend, with trend, with trend, with trend, with trend, with trend. Winning more than he loses. That's all we could hope for. That's the recipe for long-term success. Nicely done, Wayne. All right, trend trade. But we saw that one, Victor. You posted that one twice. That's probably the repost. Trend trade, triggers up, price in transition, directly into one-to-ones at 82. So you've got one-to-ones at 82. Puts you right inside of a zone on the large chart, directly into trouble. Small chart, price pulls back to the area. There's your entry. You're 2 bars late on that one, Victor. I'm not sure why. You're in at 80, directly into trouble, right? And you're making money. So, Victor, here's the question. And I don't know exactly what was going on in your head, but something made you wait for this entry at 80, right? Something made you wait for this entry. Do you see how that's the right entry down here? And it gives you 80 bucks instead of 40 bucks into trouble. The correct entry gives you room. The late entry gives you virtually no room. And it's already held once, right? And I'm not sure what the decision-making process was on that. Brain fart, that's okay. Brain farts happen. And guys, one of the greatest things in the world is when everything says up, it's more likely to go up. And we pull one over on the market every now and then. I just always like to ask, did you recognize it? Did you see it? Did you see the right entry? And typically with someone like Victor, the answer is, yeah, I sure did. I saw it hit and I second guessed it, and then I finally got in and said, all right, everything's going up. I'm going to see if I can go up with it to trouble. Nicely done, Victor. 15 up, strong side, pull back, close above, and pull back to the area, and you got out 10 bucks. Gave it a shot, and they just didn't want to run, huh, Paul? Great entry. Pull back to the area, close above, and then it didn't hit anything. Nothing. It just went sideways on you. You notice that the small triggers stopped going up. You notice they couldn't get above the large. And you said, I'm going to get out for a couple ticks. I'm going to call it, and I'll wait for a better opportunity. Nicely done, Paul. Great management on a trade that just wouldn't go. And guys, that happens sometimes. Sometimes they don't go. Trend trade, triggers down, price on the strong side, space to area. Small, there's your pullback to the area. There's your close below. There's your entry, room to trouble. There you are getting out of trouble. Nicely done. You got yourself out by mistake. $830 mistake, Victor. So those of you that are brand new to Nexgen, you're going to find these pretentious guys getting upset about $500-600 trades. I love it. When you're upset that you got out early on the $830 trade, you know that your methodology is good. You know that you know the money's there. Nicely done, Victor. I've done it. All right, Jared. This looks familiar. Down, momentum, room to trouble, pull back to the area. You get in on the bounce, right? You said you took a loss here. Oh, you tried to go long. Cool, Trina. Jared, did you try to go long against the large chart? Is that why you took the loss? Yeah, we all do it, right? Everybody does it at least a couple times. I'm going to fight the trend. I'm going to be the first one in. I'm going to share a little light reading. Oh, Justin, I called you Jared. I'm sorry. My brother wrote this book, How to Commit Financial Suicide in One Easy Step. Trading against strong triggers, trading in determination conditions. Yeah, it's exciting to want to be the first one in, and when it works, you look like an absolute rock star. More often than not, that's your outcome. But the cool thing is that you didn't just sit around and cry about it. You got your head back in the game and took the short when everything set down, and it made you work for it, but eventually it went right to Fibonacci. Took a short, your zone entry was early, so it was a bit stressful. Right into the one-to-one, didn't see, you focus on the large chart. That's okay. If the large chart is clear, what did the one-to-one do? It just got you right back to your perfect entry. Took profit and support, made back what you lost, feel like you got lucky. I don't feel like you did. Do you notice that it never really gets above those large synthetics, right? It pulls right back to the mid-band inside of them. But here's the thing. The large chart said, don't sweat it, brother. We're going lower. The large chart said down. The large chart said strength. The large chart had path. This is just, man, all of that nonsense happened inside of that one bar where nothing ever changed. That's why the large chart leads the way. Great job. Nicely done. Look at that. Momentum, path, pull back to the area inside of triggers. Down it goes again. I mean, for the love of fuzzy. How easy can it be, guys? You just got to learn the patterns. And with weak triggers, there's your bounce. And your small chart said, hey, look, there's no areas inside of triggers. Don't try the trend trade again, even if you're feeling left out. Miss Trina, let's see what you did. Down, transition, split targets, you had room. Pull back to the area, close below, half off, second target. It's perfect. It's perfect. Do you guys see it? So iPapa and Alex Suba and you guys that are on TradingView, first the large chart says down. Trina commits to going down with it. It's in transition, so she says, I'm going to split my targets, but I have room to trouble on the large chart. Look at how long she had to wait for the pullback. Pull back, pull back, pull back. And when it gets there, she says, whoa, that's not my entry. I'm going to get in on the good side of those small triggers. I'm going to run it down. I mean, this is perfect, Trina. Great hold all the way to the outer band. All the way to trouble. Textbook. From 68 to 34. Hold on, 68 to 34, 54, 20. Whoops, wrong one. Where's my calculator? That's what, 34 points times 20 bucks a point. Your runner was worth 680. I was split this morning, Morgan, so I didn't roll. It's 50-50, 100%. What a great trade. Let's see if you did it twice. Triggers are up, strong side, room to trouble. There's your pullback. Area is still resistance. Breaks above, area now support, so you get in a little bit late. I love it. Take it up to the first target. Take it up to the second target. Absolutely beautiful. Trina, I love that you're taking that lesson and incorporating it and being a little bit patient into these areas, letting them break so they become, it's paying dividends. Absolutely beautiful. Great job. All right. Let's talk about a pattern. This is your large chart. Does everybody see how price made it up to the mid-band from the middle of nowhere? The market was going down, just pulls up, hits a mid-band. Guys, if your large triggers have room to produce a full bar, this is what we call the gap theory. And the gap theory is the reason that you don't take longs into a mid-band. Because if you reach a mid-band and the large triggers are a full bar away, price tends to snap back and close the gap to those triggers. It's a great giant red flag saying don't trade into the mid-band. That gap theory is more likely to close if it's not coming from a termination. So it keeps you from looking for that long trade. Let it close the gap and then let them figure out what they want to do. And very often when they don't reach Fibonacci, they love to look. They love to look lower. They love to look for the next area. All right, NASDAQ is down. We're below trouble. Don't have a trade yet. Whew, look at that. So can we play if then? If the market pulls back to this zone, if I get a close? I don't have rules for jump the fudge in, Victor. I don't have rules. I am bound by contract to only take a trade if it fits the plan. You guys want to know why I have a very basic plan? And I hate to admit this. My opinions suck. I have never been able to trade my opinions with any success. But what I have been able to do is trade the KISS plan and find an extraordinary level of success. Right now, I would need a pullback to an area with a close below the small triggers. That's it. I'm calling my shots. That's what has to happen for me to go short. On the S&P, looks the same, doesn't it? Everything is down. Getting close to a zone. Man. I would have to pull back to an area and close below. And wherever my entry came from would have to give me room back to that trouble. Or I would simply have to get below the trouble. That's it. How wonderful. I can call my shot. Where does my next trade come from? Right there. That's it. That's all I'm in control of. Now it either does or it doesn't. I don't get a vote in that. I don't control the market, guys. I don't make the market go up and down. I don't decide what's going to be a top and what's going to be a bottom, right? These men and women do. This is your large chart, the big crowd, institutional traders, the 1%, whatever you want to call them, the man. They create trends. They establish momentum. They react at areas. I'm not even the small crowd. The small crowd fights. I'm the guy that latches onto the large crowd and takes advantage of the small crowd's failure. Guys, that's the whole methodology. Go with the people in control. Where's my picture that I made this morning? The market goes up and down. There's always a fight. Pinpoint the fight. That's your highest probability. You don't have to be first, right? You don't have to be the last one in. Does anyone know what a remora is? Have you ever heard of a remora? Remora swims around by sharks, waits for the shark to do all the hard work, and then eats like a king because of what this guy does. That's us. We're not bottom feeders. We are opportunists. And we know that if we just stick with the person in control, we never starve. And once we fight them, oh, help, things get hard. Sellers are in control. Market is down. Strong side. Here comes the fight. Do you guys see it? Here comes the fight. Are they going to make it? I don't know. I hope so. Hey, iPapa. I love it. Already posting. Let's see what we have. Triggers show momentum down. Small and large triggers separated. Below mid-band broke. You took a short as it pulled back to the area. Stop loss at the previous resistance. Set profit target at the support line. Close the position when you saw profit. I love it. There you go. So I pop up. You are mixing the two platforms just a little bit. One of the cool things is you don't need these large triggers on a 15-minute chart. It's so slow. But you had it right. It was down. It was strong side. It pulled back to an area. And the only thing that's a little different is this is your entry. And the entry rules say when you to an area, the close below the small triggers is your entry. Do you see it, iPapa? You had it, large chart dead to rights. Beautiful. Small chart, that was actually your entry. And look what it did on that trend trade. Just kept going. And you still made money. You got the early entry, still made money. And there was even more to make. Imagine when you start getting good at this. Imagine when it becomes second nature, what you're going to be able to pull off if you're already pulling this off now. I love that. I do want to share this picture for you guys that are new. Welcome to Nexgen. This is what your first 3 days feel like. You're going to be like, oh my gosh, there's a lot of information coming at me. There's momentum this and area that and entry this. You're welcome. And Papa, we do this every day. So every time you enter the market, and I got to tell you, you couldn't have done it better than you did. This is what I saw, Mark. This is where I did it. This is why I did it. And then we just get to talk about, is there a way to do it better? And maybe, if anything, we just get you a little extra money when the market's moving that strong. Good stuff, man. But this is it. I felt this way too when I started. When I first started, the gentleman teaching the class used to use the phrase, it's obvious. I don't believe it's obvious. I don't believe that trading is obvious, that the rules are obvious. I don't believe that anything is obvious, but I believe you can make it obvious by keeping it simple, by focusing on strong triggers first. And when you're comfortable with that, add your terminations. And when you're comfortable with that, define your entry, and suddenly you have a trade that you can prove wins more than it loses. Let's see if Pete uses momentum and path. Everything says down, all the momentum, pull back to the area inside of triggers, get paid, get paid. Everything still says down. Pull back to the area inside of triggers, get paid, get paid. Pete, it's almost like you've been hanging around for a while. Broke the fib, losing momentum. Pete, you get in on the momentum. Mid-band holds, and you get paid again. Guys, Pete has a big X next to his name. He's been with Nexgen over 10 years. Nexgen's been teaching people to do this for 30, just about. There's a reason we're still here. And once you understand how to identify momentum and path, you're going to get creative. You're going to find ways to take advantage of the market, guys. And the high probability trend trade is not the only trade. I can't stress that enough. The high probability trend trade teaches you to recognize advantages. From those advantages, I'm going to the instructions. From those advantages, you can learn HVA trades that revolve around termination conditions that reverse the market, a good top or bottom, that say that your path must be clear. Rule number 2 from the high probability trend trade. Defining your entry at triggers, just like the entry for the high probability trend trade. This one will help you get in closer to tops and bottoms. When everything is strong, when a good top or bottom reverses the market, when you have room to trouble, you can take a momentum style entry. That's kind of what Pete took here. As everything is breaking out with momentum, it's a quick little snippet. Bam, right to the fib. Pow. That's the one. Nice job. Guys, remember that I don't tell you how to trade. I give you the tools to find the most. Down organic. This is where I need a bit of a lesson. It pulled back, but there's your area right there. So organic, are you with me? I'm going to type out the rules for entry. Guys, I am such a language nerd. But I want you to see how the language describes the entry. Pull back to an area. So organic, that's your only option, right? Pull back to the area. And when you get there, close below smalls. That's your entry. And it had nothing but room. Now, what does this do? And a lot of people will say, well, Mark, I still got paid, right? Organic, doesn't it feel better when you're trying to go short? That is, and let's talk about the logic behind it, if we can. Why do we wait for the pullback to an area? And this is for everybody. Sellers are in control. It's Downsville, population U. Do you guys see it? Everything says down. The big crowd, the large crowd, the big chart, everything says down, right? So what is a pullback to an area? Whoops. It's more than just like a happy little phrase. Your pullback, and it's right there too. And what this is, sorry, this is the buyers trying to take over against overwhelming odds. And let me know if that makes sense. When everything is screaming down, these little, that's the buyers saying F your strength. To hell with your trend. We want it to go up. And where do they typically go back to? Well, study tells us they typically make it just as far as the brick wall. And at that point, there's your close below the small triggers to get back in line. There's your close below the small triggers to get back in line with everything that the big crowd wants. So what we're doing is, and this sounds horrible, right? We're like, come on, buyers, give it a go. I dare you. And we're dangling a carrot right at an area. And when we get there, we're like, okay, we're not going to fight their momentum. So that little pullback, guys, it gives you more room to trouble. But what it does is it pinpoints that fight's failure point. And the close below the smalls, this is the sellers telling buyers, no effing way. The large chart says down. Organic, does that make sense? Alex, does that make sense? We let the large chart tell us where we're going, but we let the opposing forces fight. We want that fight. We're praying for that fight because we have a methodology that shows us exactly where that fight is most likely to be lost. And then we have, goodness gracious, oh, son of a gun, rules for entry, right where the fight is most likely to be lost. Pretty cool, right? But what's the challenge on this one? We're right where the sellers might jump ship. Do you see it? So if you took the close below, it's right at that point where the sellers might give up, right into an area on the large chart, which means I don't have to take this trade. There's nowhere to go. Does that make sense? Why are rules 1 and 2 room to targets? Because areas are where decisions are made, my friends. Now, what happens if they pull back and we get a better close below with room to trouble? We might be able to take a shot. Organic is an awesome, awesome trade. And the only thing I can say is maybe we could pull a little bit of stressful moments out of it, right? Just a little bit of stress out of it by waiting for the pullback. Great job. All right, Justin. Are you serious? Everything says down, 3 triggers through, all the momentum, pull back to the area, get in on the way down, make money. So guys, one of the things that you can do is go back to the trade. Justin, if the rules say pull back to an area inside of triggers, what do you suppose is one thing that you could have done just a little bit better on this trade? There's my area inside of triggers. There's your entry. You want to see something cool? That right there is more money in your pocket. That right there is less risk on your trade. But this is okay. This is normal. As you begin to learn the software, guys, your entries are less likely to be perfect. Why would we put the pressure on ourselves to be perfect? But let me show you some really common entries. Whoops. So common that I made this picture. In the beginning, a lot of you are going to just jump in and you're going to say, I sure hope it doesn't go without me. Anyone other than me guilty of that? They sure are moving fast. I better jump in. Well, there's a reason the methodology is in play. And if you jump in up here, all you did is you shorten the distance to your profits. Oh man, Justin, I'm so guilty of this. And then what happens is your risk is huge because your stop goes below the triggers where the market shouldn't. And then the second most common one, and man, I'm so guilty of this one too, is they almost get to your entry, and then on that tiny little chart, they give you 4 ticks up, and your brain says, jump in! They're going without you. And you're like, okay, and you get in high tick, and then it comes right back to the area inside of triggers. Again, anyone other than me ever fall for that head fake? What's it do? It increases risk. It decreases profit potential. And then it gets to the best entry, and your brain says, don't believe it. Look how strong they're coming down. They're going to run your ass over, right? And you skip it. You said, well, I'll let the market go down. Then they'll never get me. And all you did is increase risk and decrease your profit potential. Do you guys see how nothing changed on the large chart when the small chart retraced? So, Justin, you're in the perfect spot where you're learning to trust the idea that the highest probability trade comes from an area inside of triggers. You just got in a little late, but the large chart still won, didn't they? And you still made money. So you're taking the very basic concepts and you're just going to keep doing it every day, refining it a little bit every day until it becomes easy, until you develop the trust that you need to get that limit order right where it belongs. And you're not going to have trust in 10 trades or 20 trades or 30 trades, guys. It takes a while to build that trust. This is why we don't trade into areas, because areas create bounces. And Justin, I think one of the easiest ways to trust the rules isn't from trading. When you're in a trade, there's an emotional connection between everything that's going on and wins and losses. And it becomes a little bit difficult. But I want you guys to see this. Let me find it real quick. So on the spreadsheet that I gave you guys, this picture that refuses to open. Hold on. There we go. This picture has momentum, and it has clear path, and it pulls right back to the mid-band inside the triggers. Do you guys see it? There's the checklist on your plan. This is from 2022. So Justin, do you see the pattern? Hold on. There's momentum. That looks just like yours, right? Pulls back to the area inside of triggers and down it goes. There may be something to this. Let's see. Hold on. Momentum, path, pull back to the area inside of triggers. There it goes again. So when you start seeing the same thing over and over, and you start seeing the results over and over, your brain says, all right, maybe we can get in at that area. Maybe it is better to have less risk as long as the large chart is perfect. And then Justin, I'm going to show you the one that's going to absolutely mind kill you at first. Hold on, you ready? Sometimes you're going to have all the momentum, and sometimes you're going to have a clear path, and sometimes you're going to find the perfect entry, and sometimes they're just going to run your ass over because you're not in control. And I pulled this picture. Trina, thank you for this one, because Trina took the perfect high probability trend trade and it lost. This is going to happen. And what happens is you have two choices. you start getting angry, questioning the methodology, right? You lose trust. You start to skip trades. We've all done it. When my hope is that when you look and you see that everything is met, right? If the rules are met, if you've really done some study, Justin, how often does this pattern win? How often does the high probability trend trade win? If you took 100 of them, what do you think? That's your number. Well, it's only one trade, right? Justin, if you ask 10 girls to go out with you and 8 of them say no, you're still going out Saturday night. But this is a pattern that wins typically 70 to 80% of the time, which means that it's obligated to lose 20 to 30% of the time. So if you put all of your emotions in one trade, one loser, oh, how stressful. But check it out. And this is where the trust comes from. Odds favorable momentum, clear path, pull back to an area inside of triggers. You're at 0% winners. You're at 50% winners. You're at 75% winners. You're at 77, 80, I don't know. Now math gets hard for me beyond 4. So it's not the one trade. It's the sample. It's the 15 to 20. How are you doing at the end of the sample, Justin? And that's why every time I take a trade, it's just one trade. If I lose one trade, I don't care. I go back and I ask myself, did I follow the rules? And if I followed the rules, I don't even call it a loser. I call it a winner that didn't work. My triggers are down. I am on the weak side of the triggers. I did pull back to an area. If I got to close below the triggers, I don't have a lot of room to that outer band. I don't have a lot of room to that mid band. But do you see how waiting for the close below keeps you from getting in too early? Pretty cool, right? This one doesn't have much room to run, but entry rules keep you out of the loser directly into support. And they tell you don't trade right into that outer band. It could stop the market. And now you're just holding and you're waiting for a better opportunity. Justin, it was a great trade. And just because I went through that doesn't mean that it was a bad trade. It just means that with momentum and the potential to break, your best entry is from the area inside of triggers. That's it. There it is again. Do you guys see it? And then when price reaches 1-to-1s and the triggers don't break, what happens? They push beyond the triggers, lower. I love 70 to 80%, Justin. If you can't make a career on 70 to 80% winners, we've got to work on management. Great entries create manageable trades, guys. Great entries reduce risk. Great entries give room to trouble. That's beautiful. That's what we look for. All the momentum pulls back to the area inside of triggers. Pete gets in on the wrong side of momentum, but it's there. So when it bounces a little, he doesn't sweat it. There's his perfect entry. Do you see it, Justin? He jumped in early. He made less money on this trade than if he waited for the area. But Pete knows with this look, it's more likely to hit that fib than it's not. Great job, Pete. You missed the add-on? That would have been the add-on, huh? And look where it went, right to the target. Like a freaking sniper. Buy low, sell high. Has anyone ever heard that? Buy low, sell high. I'm thinking of trademarking that phrase. That's low. The pullback to the area inside of triggers. That's high. The large chart trouble with all the momentum and path. You know where they are. Now you just have to learn the pattern. Pretty cool, right? Overwhelming on day one, isn't it? Did you guys know that it's okay to be overwhelmed? It makes sense to be overwhelmed. I'd actually be shocked if you weren't a little overwhelmed on day one. But the cool thing is that Pete does the same damn thing. There's market reverse out of nowhere, triggers up. There's the momentum trade, pulls back. He's in on the wrong side of triggers, and it works out. In on the wrong side of triggers, Pete, below the fibs. That's where that later entry makes a little more sense. But when you've got 10 years and time on the pond, as Pete calls it, you begin to say things like, wow, all of my triggers are above support. Everything says up. I'll risk it for a couple ticks. Nicely done. Nicely done. We got some old faces coming back. Not old faces. That was the wrong phrase. It's good seeing you folks. Ed's in here. Mary Rocks is in here. I saw Lenny in here. You guys that have been doing this for a long time, E. Webster, you keep coming back to my room. Hey, Mary Rocks. Guys, if you ever come back because you need help, I got you. Don't be afraid. I know most of you just want to come back and see me. You're like, I missed Mark, that guy. Are one-to-ones going to break? I don't know. But guess what? I don't have any rules to take a trade directly into an area where no triggers can get through. So I haven't taken a loser. Pretty awesome. Crude oil is struggling, just right at areas. All the momentum, none of the path. Uh-oh. What did the NASDAQ do? Let's go see TradingView. Still down. Uh-oh. That was the one we talked about, but those stupid one-to-ones. Darn those one-to-ones, keeping me out of this trade. It's all right. $269 billion daily. I'll find my 400 or 500. No problem at all. You left trading, coming back fresh. Everything looks new. So, Mary, nothing has changed on Renko charts. Nothing at all. It's all momentum path and entry. This is TradingView. So while you were gone, and I hope everything resolved well, Nexgen opened up Nexgen Pro Trader funding. So we have a prop firm now. And our prop firm doesn't use NinjaTrader. It uses TradingView. So a lot of our clients have made a switch over to TradingView. So now I teach NinjaTrader every morning for the people that want to run NinjaTrader. And I teach TradingView every morning for the people that want to do TradingView. So it's really the exact same thing that we've always done, though. Everything starts with the large chart telling you the easiest direction to go. Everything starts with a large chart, right? Saying up, and we just wait for the fight. So nothing's changed at all. Let me know how I can help as you get your feet back underneath you, though. You know my email works if you need to send a couple pictures and ask a few questions. And that's for everybody, guys. I'm available. Don't tell my wife I said that. Sure enough, look at that. Just not a lot of room. You're welcome. It's nice to see you in here. For those of you who don't know, Mary Rocks made like the best trade tracking sheet ever and gave it to everybody in Nexgen. Drop down menus, all sorts of stuff. I have no idea where it went, Mary. Uh-oh, here we go. Did we get there in time? Momentum, path. There's my area inside of triggers. Justin, if we get filled, is it a guarantee winner? But how often does this pattern win, guys? Strong triggers is momentum. Nothing in the way is clear path. Pull back to the area inside of triggers. You guys want to hold for the home run, see if they give it to us? First target's at $100. Let's learn how to get paid. Second target, what do you guys think about Fibonacci support? Whoops. Haven't even gotten a reversal bar. Up $100, 125, 150. If they hit our reversal bar, that'll be a $100 profit. We'll take off one contract. Stop needs to go where the market shouldn't on the other side of the triggers. Are there any questions about this one? First, it's momentum. Then it's path. Then it's a pullback to the area inside of triggers. Trigger lines define the retracement zone, which means it could run all the way up to the top. Hell, I don't know. There's where my risk goes. Where the market shouldn't, beyond the retracement zone, beyond the areas. All I need now is for the sellers to come back. The buyers did their part. They gave us the fight. There's a reversal bar. The KISS plan says when a reversal bar prints, put your stop 2 ticks above it. The buyers have failed. The sellers have taken back over. The market is pushing down. It doesn't guarantee a win, guys, but it does guarantee a much smaller loss if things don't work out. That's the KISS plan, keeping it very basic. When you grow a little bit, you probably won't put your stop right into retracement zone. First target hit, KISS plan says go break even. You've already been paid. Let the market run. Does everybody notice that break even is right at an area inside of triggers with odds favorable momentum and a clear path? That's an entry. But I made $100. I want to take the stress off. I'm break even. I can't lose. I've got nothing to lose. Let's see if momentum pushes. Sure enough, momentum, right? Are they going to make the fib? What do you guys think? The only answer is I don't know. That's the only answer. Oh, they got us. We only made $125. Shoot dang heck. And it pulled right back to a mid-band inside of triggers. Guys, this is your KISS plan. This is what I teach every day. That's it live. 100%. Designed to teach you how to get paid. Do I have it open? Check it out. If I have strong triggers, if I have no terminations, I'll enter at the area inside of triggers. The management plan. I have not, Pete. It was split volume, so I didn't bother. I also give you guys a way to manage these trades. I'm going to show it to you. It's in the spreadsheet that I gave you. If your entry is at an area inside of triggers, then your stop is above the triggers. This is where the market shouldn't go. This is where the advantage of rule number 3 is no longer in place. You're either going to get stopped out or you're not. You don't get a vote. Targets are 100 and 200 in the KISS plan. If you don't get stopped out, your new stop is above a reversal bar in the direction of the trade. You're either going to get stopped out or you're not. You're not in control. Targets are still at $100 and $200. If it hits your first target, you'll go break even. Because you're going to take all the risk off that trade because the only reason you're in it is because the large chart said it was going further. And then you either get stopped out, break even like we did, or in the KISS plan, it goes to your second target and produces a $300 trade. Whoops, cancel, down. They're just going sideways now. Large chart says down. Large chart has momentum, right? We got the best entry. We got paid on a trade that appears to fail. How cool is that? It's still down. We'll see what it does. Trina, loser on the first trade. First trade on Monday, losing trade. Down, transition, manage through. I had room to target, but Mark said no, I was already in. So where were you in from? There's your pullback. First stop here, realized too much risk, should have gotten out. Well, you got in at 95. It looks like you had room, right? Or did you get, no, you're in at 95. Stop loss up there. What was the top of the zone? 75, 95? Did ours look different? Let me see if we can find yours on here. At 95, you did have room, not much, and that may have shifted. 71, that's where we hit. That's where we said we needed it. I think that was your entry, right back into trouble, and that zone may have shifted a little bit. And then they came up and they went back down to trouble, and that's where they just launched. It's a good trade, Trina, it just didn't work. And now it's all down, right? And there was your close below, but it was too tight. There's your pullback. Close below here is really tight to support. So we'll see. Do you see how it still says down? That's the most important thing. Sometimes they don't give you a pretty entry. That's what stinks. But Trina, you had all the room. You were good. Boaz, you have a fib that I do not have. Well, you're in the ES March 26, Boaz. I'm in December. I didn't roll. So we are trading completely different markets. All right. Daniel 3 and everybody, I want you to see. It's still momentum and path. They never get above these triggers. They pull right back to the mid-band and try. They pull up to the one-to-ones and triggers. And now they seem to be heading down with the large chart advantages. Jerry, everyone's different. My personal plan says if I don't have at least $100 worth of profit before I have to manage a trade, I don't want the trade. That's my personal. Some of you like 20 or 30 bucks. Some of you want $200. And I've had this conversation with a lot of people. Management requires reaction. So you want $200, right, Jerry? That was too tight. Didn't want it. But with $100, it's 5 points. So from 36, I would have to be in at least 41. Because if I'm in at 41, my reflexes, because I can read my chart, Jerry, I feel like I'm quick enough to manage a trade. But I also only take the right entry. I'm not taking a close below right here. My trade was all the way up here. That was the trend trade. It just didn't fit my rules. So I'm not going to jump in after it's hit at 1, 2, 3, 4, 5, 6, 7, 8, 9. This would be the 10th impact, right? I'm cool just waiting. But everybody's different. Everybody's different. If you've got the reaction time, you probably don't need as much space. If you take 30, 40 seconds to make decisions, you probably want some room to make those decisions, right? So you can answer that question. I can't answer it for you. You guys see how this is still support? This is one of the best lessons we did last week. One of the most lost trades among new users is jumping in right here, saying, well, I'm below trouble. I'm below trouble. It's got to go. It's got to go. I'm below trouble. It's got to go. Guys, this is what I call the prairie dog. An area isn't broken until you get a full defined price bar below it, and then it pulls back and behaves as resistance. As long as you never get below, that is 100%. support. Does that make sense? So you guys that are trying this well, I'll just jump in and pull one over on it. You're losing more of these than you win typically, at least the ones that you post in the room. Triggers are still down, right? Area's still holding. We're just waiting. That was such a good lesson. Not that I'm like super awesome, but one of the things that happens is you guys post in my room and I'm like, oh my gosh, I've got to make a lesson on this. I've got to figure out how to make this easier for these guys. And here's the lesson. You guys want to do it? We don't have rules met for a trade right now, so we might as well just get smarter. So for you guys that are on TradingView, and remember on NinjaTrader, it's the trigger lines that defines a break. On TradingView, guys, if price comes up and hits an area, that area is resistance. 100% coming up, hits it, it's resistance. It's not until this bar where price breaks above that resistance makes the move to support. And then price comes through and hits it, and look, it never gets the breakaway, and it remains support, and off it goes. And then it comes down, and there's your breakaway, and now support is resistance again. It's that breakaway bar that new users tend to omit. New users say, oh, there's my break above, it must be broken. Get the full bar. It pays huge dividends. Does that make sense? And there's more to it, but that's the basic concept. So if price just peeks its head, it's not broken. That's the prairie dog. Jerry asks, should you wait on TV for the 15-minute chart for the bar to the left or at least inside of the triggers? No. God, no. That would take forever, Jerry. 15 minutes. What can you get done in 15 minutes? There's places that can change the oil in your car in 15 minutes. Right? Large chart says down. It's down. Period. That's it. No question. Until a bar finishes and these roll up, it's down. And look, it's been down ever since. Inside of one bar, you could have it everywhere, right? So let it be slow and let it do its thing and let it define the trend. And then once it's down, you have to have room. So honestly, Jerry, my triggers are still down. If I took an entry right here, I have room to get back to trouble at 53. I just don't have entry rules met. So once I say down and room to targets, let me see if I can find the picture real quick. You guys know I have pictures for everything, right? Define directions. That's not the picture that I want. I'm going to find it for you, Jerry. Here we go. I'm just going to pull it over this way. Once it's down or up, it's room to targets. That's it. And if I have that room on the 15 minute, if I have that room on the 1 minute, I'm going to go find my entry. Your large chart read takes about a second. They're down. I have room. If this closes below right here, Jerry, Shortsville, baby. But look, it's right into trouble. Dang it, I don't have room. So if we go back to what we're doing, are we talking about this, Jerry? Hold on. I'm sorry. This is me confusing you. Are you talking? Where is the other half of my? There it is. That picture here? No, you're okay. This is a 1 minute, Jerry. I'm sorry. I need to put that in there. This is a 1 minute chart. Defining room on the 1 minute. It could be true for the large chart as well, but that would take forever. So this is the 1 minute. Resistance, pulling back to resistance. Resistance breaks, becomes support. support breaks, becomes resistance, which is why that little peak tends to lose. Why that little peak tends to lose, because you don't get that breakaway bar. Still support. Remained resistance. When it broke, this used to be support, came back to resistance. That's where your short trade comes from. Why your prairie dog fails, it's still resistance. Never broke, jumping in short, not a clear path. And guys, this is why the 1 minute areas deserve more respect than you guys give them. So many of you, oh, I'll take and manage, I'll take and manage. You're making life hard. You really are. Triggers are down. I like to do this trick. That's the top of support, right? If I take a short trade, I better have room to get there. Jerry, that doesn't fit your 10 points. But I know where trouble is. That was my close below from 68. Just didn't have much room. Actually, I did from 68 to 61. I had 7 points here. Let's go short. Stop above the pivot. Large short targets. Take half off at the mid band if they get there, just because it's potential trouble. Do you guys see it? It's down. It's room to trouble. It's a pullback to an area. It's a close below. Because it's weak side, I've got half my targets here, the other half there. The only thing it doesn't guarantee is a winner, guys. But that's the method, right? Go through it on simulator. Practice it. You know what? I'm just going to take them all on simulator, and then I'll figure out. Oh, there we go. First profits. You guys just want to go break even, see if they hit the next profits? Can't lose, right? We saw the trouble. We know it's there. Probably missed us. Watch this. We'll lock in 160 bucks right behind the mid band. You guys, oh, there's profits. That's your trade. As he drops his microphone. Fits the plan, doesn't it? First, it's down. It had room to trouble. It was on the weak side, so I took half of my profits at the mid band. I took the other half at the large chart trouble. That was a 4 lot. How much was that one worth? 6, 9, about 870. That's not so bad, right? That's not so bad. And we know where the market can stop, and look what it's doing. It's stopping. Took a pullback trade. Saw multiple pullbacks, resistance, set my stop loss at resistance, thought about setting it at the upper small trigger band. Position closed before moving, stop loss, anticipating price going down based on multiple pullbacks to next support. All right. This is a good look, Papa. Right there. That's a good close below small triggers. And it gives you room back to the mid band. Do you see it? So it goes back to language. Pull back to the area. There it is. There it is. There's your first close below. So the first one that fits rules is here. And then the mid band bounces. And then the second one that fits rules is here. Does that make sense? You're killing it already. Just a little bit of patience. And then, no, you're perfect. You might have been, here, watch this. There's your first close below right there. Do you see it? So if you were in at 80, you had about 15 points to get to the mid band. So you're actually late. There's your second pullback, which is fine, 93. You're already in the trade, right? You already had your signal. You're already in the trade. And the stop thought on a trend trade, buyers are in control, right? There's your signal. Buyers failed. Does that make sense? Large chart says down. You're trading with the large chart. Buyers fight, hit your area, buyers fail. That's your entry signal. Your stop goes above their failure point. Oh, I'm locking up. And your stop would have kept you safe. So really, anywhere you enter after that is great. But we want room. Do you see how the room created a bounce? Or the lack of room creates a bounce? Let me see if I can kill that and bring it back up. Stop goes above the pivot high, and it never gets you. Never hits you. And the market, while it dances because it had something to bounce off of, ultimately does everything the large chart said that it would. Does that make sense? So your entry was actually a little late. Your entry was at 71, which was directly into trouble. Let me know if that makes sense. You traded directly into the mid-band. So you didn't give yourself any room to manage. And then when it bounced up, you panicked and it got you. So the closer you get into these areas, the better. Giving yourself room to manage, the better. Does that make sense? And man, this is what, like day 2? You're doing great. You're doing great. The fact that you're trading with the large chart, the fact that you have room on the large chart, we'll get these areas, man. We'll get this refinement process down. And look at that. Large chart area held. Boom, baby, zing, pow. Wow, there it goes. Why do we leave ourselves room? Because without room, bounces happen. Momentum, path. All right. My rules say, whoops. My rules say I need to pull back to an area inside of triggers. Well, here's my triggers. And there's my area. Ninja Trader users, once you get below the triggers, you don't know if, when, or where the market is going to continue up. That's where rule number 3, advantage, is no longer in play. The only option right now in this trade is a momentum style entry right off the 1-to-1s with a very tight stop in case it fails. There's your momentum style entry, and it has not failed. That's one of those trades you're going to learn with a little bit of experience. With all this momentum and nothing in the way, price breaks above these 1-to-1s, resistance behaves as support to the tick, and off it goes. Pretty cool, right? Everything is, I would say, predictable. When you have a plan, guys, it's not about the wins and losses. It's about the execution of the method. It's about believing that there are opportunities. And if you don't find any opportunities right here, and if you don't find any opportunities right here, just wait. There's more coming. Watching the market run and you're not in it is one of the biggest ways people break rules. My 1-to-1s are below the triggers, guys. I've got momentum. My path is clear. They're on the wrong side of the triggers. As a brand new user, I'm not allowed to take that trade. As a brand new user, it doesn't fit my plan. Does that make sense? As a brand new user, as day 1 through 30, trying to give myself the highest chance of success, I don't have rules met. That's just it. I'm going to share this with you guys because we're having a good time. And today is flying. Have you noticed that? Today is really flying by. So guys, the key to everything is having a foundation, understanding the basics, and then compounding a bit. So for the new users, I blanket you with very conservative rules, the recognition of advantages. And guys, I lay into your hot little hands a very solid plan that optimizes your chance of success as you learn to read your indicators. So for all of you new users, termination conditions are bad. No momentum is bad. Areas beyond the large triggers, they're horrible. Why? Because blanket rules increase the likelihood of success. Confidence comes from the memory of success. They're not always bad, but you have to know when to use exceptions. One of the biggest exceptions is saying, you know what, there's no area inside. Well, obviously that hit a termination. I'll use a reversal bar for entry if I need to. Guys, the more time you spend with the software, the more patterns you see and recognize, the more opportunities you recognize, the more doors are open for you. Learn the process that yields the results. This is the most famous phrase I will ever say. Learn the process that yields the results. The results seem to follow. That's where your KISS plans come in. Keep it basic. Follow simple rules. Be okay not looking for all the trades as a brand new user. Only the best trades. You can find an extraordinary level of success, and I've been watching it for years, guys. I wrote the KISS plans based on the challenges that I had as a brand new user, getting it the path of least resistance for you. The further you guys deviate from simple, the longer it typically takes. So question everything. So iPapa, keep posted in the room. Ask a million questions. I'll give you every answer. Justin, same thing. Daniel 3, I'm committed 100% to you guys getting where you want to be if you just open up and ask some questions. Give yourself a little bit of grace. That's for my wife. You're new. It's okay to be. Guys, this was written in response to an email that somebody sent me, mad as hell that people were taking trades that weren't only high probability. Guys, there's a million options with this software. It's the world's greatest elliptical. But if you don't learn how to turn it on, you're not going to get any skinnier, right? Every diet works until you don't follow it, and whatever other cliches I can come up with. Every move is not your move. There's momentum, 3 triggers through, pulled right back to the 1-to-1s inside of triggers and started bouncing down. Do you guys see it? Justin, that looks exactly like the trades you took this morning, 100%, without question, identical. The market has a memory, guys. Price reaches a mid-band, large triggers a full bar away. It typically closes the gap. The market has a memory. Price reaches Fibonacci resistance. None of the triggers break. The market goes down. The market has a memory. Price reaches Fibonacci support. Even with momentum, none of the triggers break. Nobody in this room had to lose a trade into that area. Some of you may have chosen to lose a trade into that area, but it wasn't because you were following the plan that I give you. My job is to give you the best of the best, to teach you to read your indicators. Guys, your job is to ask for help when you need it. I have literally given software to friends, and I can't get friends to ask me for help. I know it's difficult, but that's how you get to where you want to be. Triggers are up. I have no room. That's how quick it happens. Triggers are up. I have no room. Not yet. Not yet, but I might eventually, so I'll wait. Guys, we just made it through an hour and a half. I also want to point out, we're up $1,000 from one trade on a 4-lot, trading the KISS plan in NinjaTrader, and maybe not as spectacular because we haven't been here for the good ones. We're still up money on NinjaTrader following the KISS plan. Keep it simple. Adam P, how's it going, man? Good triggers, manual entry, stopped out to the tick. All right, Adam P, gap theory. Do you see how far away those triggers are? Full bar. They close the gap to them. That's okay. It takes a little bit. But check it out. Did it go down from there? So let's go through just the language for entry. And this will be, guys, this will be helpful, I promise you. So pull back to an area inside of triggers. I'm telling you, if you learn this phrase, it's magical. And I'm going to show you what it does for you. Trigger lines define where the market is most likely to retrace, right? Areas define the bounce point. Does that make sense? Triggers define where it's most likely to retrace. Areas define the bounce point. So Adam, you didn't have any areas inside of those triggers. They were below the triggers, right? But you still have to say, if I get into this trade and I get in early, my stop goes where the market shouldn't. If this is really going to win, price shouldn't get beyond those triggers. That stop, that even $300 is you saying, I'm willing to give up $300 on this trade, right? And that's okay, I get it. I'm willing to give up $300 on this trade. That's it. But the reality is, Adam, it's just an arbitrary number. So I'm going to give you a trick. Oh, of course. I'm going to put one more on there. If the risk is huge because the trigger, we'll just call it the retracement zone, are wide apart, I can use a reversal bar for entry and put my stop above that bar. So what I'm guessing, Adam, is somewhere right about here, you probably got a down bar, right? And that down bar, you could have put a stop behind it, and you probably would have seen profits before it ended. Does that make sense? There we go. So it goes back to basics. And guys, you'll find everything goes back to basics. If you learn that triggers define the retracement, you're less likely to put your stop in the retracement zone. If you know that the advantage is gone on the other side of the triggers, before you ever take this trade, you know exactly what your risk is going to be. And if you're not comfortable with it, you can use a reversal bar for entry. And typically, if the risk is that astronomical, it'll reduce the risk greatly. But that's one of the reasons why I go over the entry and we talk more about the language. That's why I gave you guys this. Buy or sell a pullback at an area inside of triggers. Because it's unbelievable how many problems that'll keep you out of. And if you remember the trade that we took together in class, that was the S&P, right? The trade that we took together in class didn't hit our stop because our stop was where the market shouldn't go. Right back, overran, got paid, out break even, and it wasn't until the market decided to reverse, when we start getting areas on the wrong side of the triggers, that's when it started working out. Fun stuff. I don't have separation, so technically rule number 1 isn't met, which means that I'm obligated, guys, no matter what my opinion is, I can't activate a limit order because my rules aren't met. I don't have rule number 1. What if it goes down? It's not my money. What if it goes up? Avoidable loser. I don't know what it's going to do. Hold on, I know how to find out though. Will crude oil, come on. Trying to trade here, guys. Will crude oil go down? Signs point to yes. I don't know if I want to trust my investment to that. Guys, once you get the very basics under your belt, it opens all the doors. It really does. Once you get the simple trades, is there anyone in the room that thinks they need more than the KISS plan to be successful? I'm going to tell you, you don't. The KISS plan, are you asking me if it'll work? If what'll work? All the momentum. Price breaks below the fib, snaps back to the fib. You take the momentum style entry, and you get paid at the lower band. Oh, gee. It's just a momentum trade. That's it. Perfectly executed. Price gets below the fib. You sell the pullback to the fib. Nexgen's been teaching this trade for 20 years. It's just a momentum trade. Really nicely done. You're trading with direction. You're trading with momentum. You let the area of support turn into resistance. Hold on. Broke through, snap back. There's a momentum trade from 2004. You took the modern version. And you know what I love about this trade, OG? Is you didn't hold forever. It's just momentum. Let's get paid. From 76 to 74, 2 contracts. You get to have lunch today. Nicely done. And notice that those large triggers were a full bar away. That's your little red flag. Probably going to close the gap to them. And it did. Nicely done, man. Nicely done. Oh, no, it worked. Now I have regret. Now I have to change my whole trading plan because I missed the trade. All right, I've got momentum. 3 divergences in the same price range. Large triggers are not a full bar away. I've got a clear path. So if I have momentum and a clear path, my rules state a pullback to the midband inside of triggers is my rules-based entry. My stop will go 4 to 5 ticks beyond the triggers. I will cancel my order if I hit something solid on the large chart. Are there any questions? Guys, I called my shot before I ever got a reversal bar. First, it's momentum. Then it's path. Then it's areas inside of triggers. The market may retrace from the bottom of the triggers to the top of the triggers. I've got one area inside. The only thing that's going to kill this trade is if my midband gets to the wrong side of the triggers. Does that make sense? So what are we doing? We are hoping and praying that the small crowd buyers show up and try to fight. And we're rooting it. Is anyone else doing the up dance? Come on, guys. Give it your all. Get to that midband. Come give me a trade. And now my midband's getting closer and closer to the wrong side of those triggers. Uh-oh, some buyers are sniffing the water. This will be like the lowest risk trade ever if they come get me. I'll go about 2 ticks below the midband. Stop will be 4 to 5 ticks above the midband. Are they going to get us? What do you guys think? Are they coming for us? That's a lot of momentum to fight. Oh no. It's fun, isn't it? Boaz. Everything says up. The momentum is overwhelming. Pull back to the area. You use the reversal bar because it's the wrong side of the triggers. First trade loss, second good. Didn't make good profit. First did not take good profit. And nothing ever changed, did it, Boaz? Your entry was just fine. It never, well, I don't know where your first entry is. I don't see it. You got stopped out. But you take the re-entry, and it works beautifully. Nicely done. Way to keep your head in the game. Uh-oh. Still have momentum, right? Still have room to 2250. Still have an area inside of triggers. Is there any questions about why my limit order is about 2 ticks below the mid band? And as this comes up, that mid band will come down. It's going to stay inside of those triggers. Could even go 1 tick lower, right? Because my stop goes 5 ticks above those triggers. This is a low risk trade if I get an entry, but they're not working with me here. And now I'm losing momentum, and those sons of bitches, pardon my French. It's just not my money. Now my mid-band's on the wrong side of the triggers. It's not my money. They made it to the divergence low. It's not my money. That's okay. You guys want to see something cool? Eventually, with all that momentum and path, there's a lot of you that jump in below trouble and just ride it till momentum is gone. It's called the chili dog. It was invented by a Nexgen user because he studied momentum and path and realized that there's opportunity before the retracement. You'll see it. You'll find it. Did TradingView give it up? Triggers are up. Woo! Look at that. Pow, pow, pow. Right down to support, right into trouble. I'm not looking for shorts, right? My triggers are up. A close above the small triggers here doesn't have a small chart area. I'm on the wrong side of things. Son of a gun. Happens. Trading is boring. Trading is so boring. If 90% of your day is doing nothing, how are you ever going to make money? If 90% of your day is waiting for rules to be met, oh, that's today. Did take a loser this morning. That was pre-class. That was me taking pictures for you guys. No fibs on the large chart, but that's your mid band, right? So I pop up. Where did this happen though? 2160, 2120, 20. So this was somewhere up here, right? Where the triggers were up and you had room and it pulled back to a mid band and it closed on the correct side of the triggers. So the mid band is your area, IPAPA. It pulled back to the mid band. It closed above the small triggers. That's your trend trade with everything saying up. And it went all the way to the outer band like trend trades do. That green bar was your entry. That was your close above triggers. And it looks like your small chart had already turned and given you room. So this divergence doesn't happen until a little bit after. It's just the pullback to the mid band and a close above. It's perfect. It's a trend trade. Your momentum trade was off of the fib right there. So here's your trend trade. There's your momentum trade after it. There it is reaching targets. And there it is dropping from said targets. Great job. Wayne, I thought I was the only one that saw that, but I wasn't sure if that's what it was. And that's what it looked like over here with the zones. Pull back. There's your mid band. Close above. Didn't have quite as much room. Triggers are up, only looking for longs. If I find one, I've got nothing but space. Papa Giorgio. So there's one of the vacation movies. They go to Vegas, and I believe that's the name that the youngest Griswold puts on their fake ID, actually. And then he takes over Vegas, like he wins everything. So it may just be an interesting coincidence. Okay. I wasn't sure, so I didn't want to say anything just in case that wasn't the case. But I thought that too, and I saw it. I was like, oh, that's Rusty in Vegas. Support's holding, isn't it? Weak triggers. There's your reversal. Smalls are up, large are down. I don't have momentum. Just in a holding pattern. Just in a holding pattern. Good luck with that, OG. All right, Paul, 15 up, transition, not a clear path. Entry bar prairie dog, worked out. Out of trouble. Making a little something from nothing, huh? I'll take $200 all day long, Paul. It adds up quick, doesn't it? It adds up quick. So your momentum trade was the one-to-ones where they broke, pull back, kind of. And you just take the prairie dog and it works out, but it doesn't go far, does it? Doesn't go far. So I'm glad you got paid. Good heads-up management. It's not the perfect trade. I'll manage it assertively. I think that's one of the gifts that the software gives you is you can say as you get in, this isn't perfect, I'll manage assertively. Not the best trade, I'll manage assertively. Not a high probability trade, I'll manage assertively. Maybe there's something in the way, I'll manage assertively, guys. And you get that thought in there that every trade doesn't have to be a home run, but there's a lot of opportunity on base hits. And it all stems from the same thing. So 11:42. Wayne, you're welcome to repost if you needed feedback. For sure, Paul. And guys, if you post in the room and you split, when you come back, if you need feedback, just repost them. Don't make me search for them, please. Got a lazy eye. It's hard. Large triggers never set up, never had momentum up, and sure enough, it's still going down. Pretty cool. Triggers are up. Strong side of the triggers, room to trouble. Price breaks resistance. It becomes support. There's your close above. Wayne wakes up and says, whoa, that's a trend trade with room. I'm getting in. And I liked you're in 35.7. And it gives you room to trouble, and it's just an easy trade with that look on the large chart. Really nice, Wayne. And now this one, Wayne, you've got to, like, respectfully, I'm just not that good. Everything says up. There's nothing in the way. You just kept going up. Trading into areas, kept going up. Following the large chart, man, it worked out. In before an area, out in an area, in before an area, out in an area. Second contract out in an area, trading directly into an area, out at same area, directly into an area again, this time it breaks. No area to the area. And it's a lot, and it's so much writing, and it's amazing because it's all strong side. But you traded into areas on at least 9 contracts worth. I'm glad that area broke for you. Glad the area broke for you because it was still resistance the whole way. Does that make sense, Wayne? That's the only thing I can say. You took a shot because this was up and strong. There's something to be said, guys. When your large chart is up and you're on the strong side of the triggers, That's where taking chances tends to work out a little better. Wayne knows it. He's put a lot of time into the software. But you don't even have momentum pushing it on the small chart. So a little risky. I'm glad it worked out. And trading with the trend seems to be a recipe, huh? Just trading with it. You still took a loser, right? Trading with the trend, with trend, with trend, with trend. There's a lesson here, guys. There's a lesson there. Trading with the trend is so much easier than fighting it. We got about 10 minutes. So as we come into the last few minutes here, guys, I want to remind you of a couple things. The first one is that the whole goal is to help you guys learn to read your indicators so you can make good choices. So posting in the room is how I know what you see. Auto entry, good momentum, 3 triggers through, perfect entry, first target hit, stopped out with a second higher divergence. $100. I'll wake up, probably have a cup of coffee. The cup of coffee will do its thing, so nobody will talk to me for a few minutes. Maybe play solitaire. Wait for the kids to come over, open presents. Oh, just kidding, Wayne. Christmas Eve, historically, we are closed. In the past, we have remained closed through New Year's. I don't know what it's going to be this year, to be honest with you, because with the markets open, the funding company's open. When the funding company's open, I'm working. So I don't know yet. John Novak will let me know probably in the next week. Probably by the end of this week, we'll have a definitive schedule, but I'm not sure yet. Adam, it's the perfect entry. Stop placement makes sense. First target's beautiful. Second higher divergence says cut ties. It's a little late, but the NASDAQ moves fast. And 3 divergences in the same price range says that trend is probably over. And it was. Great management, Adam. And it all came from the perfect entry. Nicely done. This is an ugly little thing known as the fake out breakout. Have you guys seen this before? Market consolidates, can't get past termination conditions. They try to break out to the upside and the sellers say no. And they try to break out to the downside and the buyers say no. And then they go right back into their range. You'll see this every now and then. When these win and they run huge. And when they stop pretty abruptly. So great management, Adam. Is it getting easier? I hope it's getting easier. Guys, I hope you notice that it gets easier. That you take a lesson, you start to incorporate it, then you take another lesson and you start to incorporate it, and you wake up one day and you're like, holy crap, things got pretty cool. Justin, have a good one, man. Great trading. I'm watching you get better every day. Keep doing it. Keep doing it. So if you're brand new with me, guys, remember that trading is a little bit of a journey, right? Keep posting in the room. Keep asking questions. The only people that I refuse to help are the people that I don't know need help. I try to be pretty warm and fuzzy. I try to be really nice, but I still have to talk about rules, right? So directly into a termination condition. Oh, you went short against the triggers, didn't work, right? We're not talking about that one. Lost your limit on live charts as soon as you switch to sim, 4 trades in a row, 4 winners. So let's look at it. Alex, and this is pretty normal, fought the triggers and lost. Do you see it? And then what is that loss? So you went short. It's hard to tell where you did it. And then you went short again and made a couple ticks. And then everything set up and you went up with it and it was easy. Focusing on one thing a day until you get it is so much easier, isn't it? I agree. Chase the market. It was running away from me. So strong triggers, pull back to an area inside of triggers. All right, Alex, do you have time for a lesson? So when the rules are met, and you get that reversal bar, Alex, are you familiar with the concept that the triggers define the retracement zone? And again, the triggers define the retracement zone. And the triggers define the retracement zone. This is a very big concept, which means that if you take the long here, that's where your stop goes, and there was money to be made. And if you take the long here, that's where your stop belongs, and there was money to be made here. And this is kind of challenging because you're getting stopped out at areas inside the retracement zone. Does that make sense? And even over here, it would appear that they really didn't get beyond those triggers. And I think that this is awesome. And one of the things that we talked about with Adam earlier, if it's just too much risk, right? If you're like, man, that mid band, if my stop belongs all the way down here, I don't want to risk that much. And that's okay. That's your right. How do you circumvent it? You wait for the reversal bar. And then your stop goes below the reversal bar. And you wait for the reversal bar. And your stop goes below the reversal bar if the risk is too big. And what it does is it keeps you from getting out when the market is still giving you that third advantage. Does that make sense? And with the NASDAQ, you're going to get these big pushes. And I think that's one of the things, especially on the NASDAQ. Almost every trade I take on the NASDAQ, Alex, I just wait for the reversal bar because NASDAQ overruns so bad, so often. Oh, this is S&P. S&P behaves. Didn't overrun once until it made it to its goal, and then it headed down. So just a little stop placement. I think that was it. But you said you lost live. So why did you go short with everything up? Because of the termination, right? You're like, oh, I'm going to be first. And it got easier on the way down. It's that little wait, right? It's just that little wait. Good stuff, Alex. At least letting the small triggers roll and getting in closer. But I get that. Lost my limit on live. We've done it. And it never happens. Have you guys ever noticed that you never hit your stop loss over the course of 4 days? It's usually like 16 minutes because we start getting emotional. So when you do take a loser, make sure that it's the right loser. Make sure that you're going back to your rules. Make sure you're making sure that there was momentum, right? That the mid-band wasn't behaving as a termination condition because the large triggers weren't a full bar away, and that you actually took the pullback to the area inside of triggers, and your stop was in the right spot. And look at that, guys. It went straight to trouble, didn't it? Is it just me, or is that everything that we've talked about this morning? 100%. And if you were in at 21 and you were out at 28, that's $350 per contract to get to trouble, $26.75, so maybe a little bit less. You will, and I say this with conviction and confidence, you will get to the point to where you're okay doing nothing. Because in a market that exchanges $174 million daily, it takes 400. That's it, 400 to hit a six-figure income, guys. That's it. Let that sink in. What a great way to